This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. This is the end of the quarter, end of the month. It is typically month-end markup. Portfolio managers kind of paint the tape into the close. It dresses up the performance numbers. They can meet their bonus targets. Anyway, but don't get too distracted. Why? Because as I wrote about last night, we've got a rising conflict here in the dollar yen. So I had not wanted to kind of focus on a summer storm just yet, but dollar yen has already decided to move in and above that 162, which is the prior high, where they came in and did hikes and surprise hikes, I might add, back in July of 2024. And then we had a big swift downdraft. So that was a yen carry trade unwind. This is kind of like the reverse yen carry trade unwind, where the dollar picks up speed higher as the yen falls. So anyway, everybody is not paying attention. Everybody is bullish July seasonality, and I can give it credit. There's a very strong history of the 2 weeks of the year right here that we're approaching, or the 4th of July, also the 250th anniversary, right, of the US. Basically, there's no reason for us to worry. Everyone is bullish July seasonality. And yet, I did write, and there's a little snippet from the room where I talked about choppy trading into the 4th of July, and then with the potential side of July-August weakness on dollar yen risk potential. So that's it. I did a little intermarket last week as well that says, I know, we still have a strong market. We've gone sideways, but breadth underneath the surface has saved us. Semi-strength has compensated for Mag 7 weakness. And then basically, we're just kind of waiting for oil to continue falling with yields, which is very much an economic stimulus, and earnings coming into view this July should also be very, very positive, at least the ones that are growing as a result of AI. Most of the rest of the market would be negative if it hadn't been for the concentration risk in AI, and the economy could even be in a recession if it hadn't been for the capex build out in AI. So long story short, AI is supposed to give us and deliver us this magnificent continuation of earnings. I have my doubts, and productivity. I have my doubts, but I don't dismiss the recession into all-time highs, which means we could go higher still. And if you recall, I had my price target even, which is kind of ironic, back in end of the year, December 30th, Market Watch interview. And they said, what do you got for a price target for 2026? And I said, believe it or not, 8,200. They don't care that it's a fib level. They want fundamental reasons. And honestly, it wasn't because of AI. So I think this is a dollar story. But the point is, everyone now is on this 8,200, 8,000. Yardini came out and announced it in May. All these other banks came out and basically said year end for them was 7,500. And now they've all upped it into the 8,000s. Can we still get there? Sure. By the way, they just upped it in May, June. So they're playing it safe. That's not what they had for the S&P target for 2026 when they printed their reports at year end. But that doesn't matter. I just happened to catch this morning and retweeted it. And basically, I didn't retweet this little review, but the point is only one guy at the end. Seaport Research Partners had 8,200 literally at the end of the December. All these other prints, and I looked it up, all these other prints came out between May and June. So nobody knows. It's just shooting in the dark. Honestly, year-end price targets are the most frustrating thing. But we can have that straight shot up. But I think it's going to be made a little bit more difficult if, in fact, we do have some drama with the dollar yen, which puts pressure on markets as the dollar moves higher. It's a headwind for equities. We'll see. It's just above that 162 level, by the way. But as I wrote last night, we definitely have to watch. Japanese currency slides to 162.41 per dollar, the weakest level in nearly 4 decades, 1986. Wow, right? So, okay, what does that kind of mean? It is a little bit of a problem as it relates to domestic folks in particular. This 40-year yen low, those in Japan who are consumers are suffering. Those who are exporters are really doing well. But interest rate differentials do matter to yen carry trade. and the Bank of Japan has a hawkish Fed pause problem. So Bank of Japan needs to hike. The US is kind of playing coy with the new Fed chair, Warsh. But the reality is Japan has high import costs, higher inflation risks, and this is something that they're going to have to deal with sooner rather than later. So end of July timeframe, very likely. And that's where we can get, yes, this kind of distribution, otherwise known as selling. And the only reason why I jumped on the computer to write this last night, as soon as we got above that 162, because I've been talking about it, right? So I've got my intermarket analysis from last week. And prior to that, watch the dollar. That was the FOMC print last, the Wednesday before that. But the point is, we have dispersion unwind, meet reverse yen carry trade unwind, which is timing with a potential negative gamma regime. So I posted some charts, and basically that just means that we are SPX 7400, above is bullish, below is not. And we can trigger some sharp forced selling below. So if you get this combination of a rising dollar yen above 162 that sticks the landing, I don't mean a quick fake breakout fast reversal, which, by the way, also can bring with its own worries of yen carry trade unwind. So either way, you can have a yen carry trade unwind with a higher yen. You can have a falling free fall yen that's pushing the dollar higher, which is also an equity headwind. Do you get my gist? So the point is, we are right now at that level when the market is precariously perched on negative gamma. So we could get into negative gamma and then that would pick up speed. So it's kind of a scramble right now, but in other words, of positioning, because we've been going sideways in large swaths of volatility in under the surface, but the markets haven't fallen. Anyway, I just wanted to kind of give you a reminder. Rising dollar is deflationary. We've got negative gamma for SPY NQs approaching. We've got yen, which is threatening. And then amongst all of that drama that is quiet, very, very quiet, we have some real selling that's going on underneath the surface. So we've got basically over the past 6 weeks, tech has really sold off. And that means that semis on this big ramp higher, very, very excited ramp higher. I know Micron earnings, amazing. But the fact of the matter is that hedge funds have actually been unloading at the fastest pace ever. It's kind of a sold to you. So luckily, the breadth underneath the surface has absorbed this. They've rotated into small caps. They've rotated into things that are more stable, non-AI. There's been a lot of diversification. But the point is still that we have to kind of watch the fact that there is some selling underneath the surface. And this is net trading flow. Clearly, this can reverse very quickly. They can come back in and buy those hyperscalers, right? But the point is, I don't think that risk is over. And speaking of the transition, rotation, you can see semis made this kind of fake breakout, fast failure relative to software hyperscalers. And then the growth versus value did bounce perfectly on that level that I had been talking about. We come into some support, which is right here. We should have a little bit of a growth bounce. And we did yesterday. We had a strong growth bounce. Google was up 5%. Tesla was up 7%. Mags has been up 5% since that Thursday low. So you get the idea. And then I also mentioned Goldman Sachs this weekend, which was kind of funny after my write-up last week where I had talked about some potential hyperscaler support relative to semis. Right here, AI build out meets. We got some AI energy deflation. Jeffrey's definitely in the camp of oil glut. And then when do we get some rotation out of the overbought semis and into the oversold hyperscalers? So that's basically the post that I had on June 25th, and fast forward to June 30, and we do have a nice solid bounce in some of these plays. And I am still trying to toy with what ratio would make the most sense relative to, in other words, bottleneckers versus hyperscalers. So if you have a really good ETF that is bottleneck focused, let me know and I'll play with that a little bit more. So anyway, I think we have this end of tape markup, paint the tape, month end, quarter end, first half of the year end, and then be careful. That's it. I'm just saying be careful. If dollar yen stays above 162, it will put some more bid in dollar strength. And that's all I really wanted to warn about today. And then you got a valuation chart that I also grabbed. Semiconductors are far above their .com extreme versus the market relative valuation, not literally price earnings. So I thought that was interesting. Tim had also mentioned something about getting worried about some valuation levels. And I just wanted to grab some charts that looked of interest. This again is relative valuation, not a literal PE. But definitely I think this is kind of keep in mind that we've got some very big AI giants, Microsoft, Meta, Oracle, NVIDIA, Amazon, Palantir, all that's, even SpaceX, which is running out of steam. That's one way of looking at this particular graph. But this is from Tony at Goldman Sachs. And it was this week when he said it's probably the worst month for hyperscalers since the Facebook IPO a generation ago. Never before have we seen so many mega cap stocks looking so bad all at once. So basically, this is from Goldman Sachs, where he says a basket of core hyperscalers is down 18% so far in June, which tracks as the single worst month since the IPO of Meta. As you can see, this is they're cutting checks. Those who are cutting the checks have obviously fallen. Those who are receiving, which is basically those bottleneck plays of memory, oh my, have been to the moon. So SK Hynix comes in supposedly on July 10th. We've got Taiwan Semiconductor with Samsung on the 7th and 8th of July. So it's going to be a very busy week, I think. And then we'll have earnings come in, and they probably are going to do the same thing. Delight. But can they actually get going again? Is there an appetite again, especially when you have this AI build out with massive distribution underneath the surface and lots of tech selling, which is this one. Sorry, the tech selling is this one, where they have literally for the past 6 weeks sold to you, sold to you, sold to you. And that's all there is to say about that. That's a risk on top of negative gamma potential and top of the dollar yen staying above 162, which powers the dollar higher. I'm not even talking about yields. I'm not worried about so much the yield complex right now, just currency. I'm just focused on currency and what's happening underneath the surface with this sold to you type of backdrop and how high we can go before we get a little shake and bake. And right now I am not, let's just say, shy to say, I know everyone is extremely bullish. I've gone over these prints repeatedly because of earnings, but we can still have a hiccup. And that's where I think we're at approaching July. All right, and the Qs, you already have the target 734.39 for QQQ. 735.13 is the better target for the chase into today. Who doesn't want to get there? 735.13. So that's the daily gap down that we're basically filling. That's the hourly gap down that the market could fill.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.